Hello, everyone, and welcome back to Wise Credit Management. This is Lesson 4, How to Build Good Credit, and this is one of my favorite lessons. We're going to talk about how to establish 2 term loans and 3 credit cards, and it works starting with no credit or even bad credit. We're going to introduce you to Credit Strong, which has a good term loan option to help you get started. We're going to talk to you about Self Lender that also has a term loan to help you get started. But not only that, it has a secured credit card for you. So even if you have bad credit, these companies will help you get your credit established. Like I said, even if you have bad credit. We're going to talk about several other options for you, including retail cards that'll help you get your credit established even if you still have some bad credit. And we're going to go over our cliche just starting out person's plan. We're calling it Rebecca's plan, where she can use these companies that I talk about: Credit Strong, Self Lender. We're going to talk about Capital One, Discover, Credit One, Blue Sky, Kohl's. We're going to throw Firestone in there as well. I did include that on the list, but we're going to talk about all of these companies that she can use to help her build good credit so that after about a year, she's going to wind up with hopefully about a 700 credit score. So with that being said, let's get started. And hey, if this is your first time joining us, we're so happy to have you here. This is just a short introduction and a review of the Essentials class. We have several pretty simple goals for the class. Mainly, I want you to understand the principles of wise credit management. My name is Jason Johnson, and while I was an active real estate professional, I focused on first-time homebuyers, many of whom needed help with their credit. Then one day, I believe that God put it on my heart to develop the program that I wish existed for people with credit problems. I know this class isn't the most entertaining, but I believe that it will be the most informative for you. It's completely free to students. It's the most comprehensive program that I know of, and if you pay attention and learn the material, you will be able to build and maintain a good credit score to help you accomplish your goals. I want you to learn how credit really works while being simple and avoiding too much complicated math. It's wisdom that works in the real world. All views expressed are my own and from my experience as a former mortgage professional. Just like your accounting professor won't do your taxes for you, I can teach you how the credit system works, but I can't help you with your credit. On the other hand, what if you do need a professional to help you out? Well, we do have members that can help you. Most real estate professionals can't, or rather shouldn't, try to help you out with your credit because it's just not what they do. You don't really need to understand something as complicated as credit algorithms. You just need to know someone who can understand it. If you need help with getting a good credit score or buying a home, we have a directory of professionals who are ready, willing, and able to help. The directory also has many other types of professionals who you might need along the way. I'm not endorsing any specific company or service, but if that person lists their company on this website, you know they're willing to help you on your journey. And if you don't want to call professionals one by one to explain your situation and see if they can help, you can go to wisecreditprofessionals.com and write one time about the details of your situation, then sit back and let up to 3 of our Wise Credit professionals contact you about how they can help. I show you a lot of screenshots of other companies' websites so that you can see where the information that I get comes from, but the class is considered a new work for education and commentary purposes and therefore does not violate copyright law. Many of the screenshots that I use are directly from the company that calculates your FICO credit score and from the big 3 credit bureaus. We do offer affiliate links, and I would appreciate if you use them, but I also strongly encourage you to use the affiliate links of the other members. When you open accounts with one of these companies, you'll get your own affiliate links offering either cash payments or statement credit, which could add up to over $1,000. And you can see how easy it is to forward the link to this class as well as your own affiliate links to anyone who might need this class. And if you want to see what new opportunities are available since I created this video, you can go to the home page and click on Options and Opportunities for You. This is where you can find our directory to local professionals and not just someone on the phone offering you a rate they can't actually give you. And you can also find affiliate links to other companies that can help you along your journey. Guys, who wishes I would talk just a little bit faster and make the videos just a little bit shorter? Well, I can. Just go to your settings and adjust the playback speed. Guys, thank you so much, and with all that having been said, let's begin. In Luke, Jesus told us, "He who is faithful in what is least is also faithful in much." So that's a really good idea to start with, that you don't need to have big account balances. You don't need to have big credit cards in order to build credit. And we're going to focus on the idea that really it takes time. So if you do what is right with the small things that you start with, credit card companies will trust you with larger amounts. So start small and build from there. Building your credit is pretty easy once you're shown how to do it, okay? It's inexpensive, or you can do it for free, especially if you don't have any credit to start with. We're going to show you how to do that. And I want you to be able to take responsibility and ownership of your own credit. There are several different types of accounts for you to use, including term loans, credit cards, authorized user accounts, and other accounts. We're going to talk about Experian Boost to add utility bills, but there are several different types of accounts that you can use to help you get started. First, term loans. Term loans are where you have a beginning balance, a set length of time, which is the term, usually measured in months. You've got fixed monthly payments to make on that account, and your interest rate is usually fixed, but it can be variable. The term loans include mortgages, car loans, student loans, things of that nature. Revolving accounts, usually we're talking about credit cards, things like that. We're talking about having a set limit. It's going to be a revolving balance based on how much you have spent on that particular account. Usually the minimum payments are going to be 2% or about $25 a month. That's usually the minimum that you're going to have to pay toward whatever balance that you have on the card. And it can be secured or unsecured. We're going to talk about both of those. And sometimes there's an annual fee. Hopefully you can avoid that. And sometimes you're going to have rewards from the card. Sometimes they offer you, especially if you have good credit, they offer you rewards for signing up. Authorized user accounts are a good and legitimate way to help you build credit. You're basically going to wind up being a secondary account holder. You're someone who is trusted by the primary account holder. You can make purchases with the credit card, and you're not responsible to repay whatever you spend. The person who authorized you probably wants you to repay it, but you are not legally responsible to repay that debt. And it gets good or bad account history. What I mean by that is if there are late payments on that credit card, or if the credit card has been charged all the way to its limit, then that it may not help you to get a authorized user status on that credit card. So this is one of those things where you really need to be careful about getting an authorized user account. But yes, it can help you. Other lines of credit that we're going to talk about, rental history. That's where you go and your landlord uses a company that reports your rental history to credit bureaus. Basically what it does is it adds a line of credit to your credit report. But like I've said before, it doesn't actually affect your FICO credit score. Utility payments, you can add those using things, and we're going to talk about the companies here in a second, but you can add those payments to your credit report. It should help your FICO 8 score, and it'll add lines of credit to your account so you don't have a thin file, but it won't help your mortgage FICO score. Experian Boost is one of the companies that will report your utilities. You can get signed up with them. like I said, can improve your FICO 8, but not your mortgage scores. But it will help you improve your chances of being approved for other credit. So it is a line of credit, and it can help you when you're first starting to rebuild your credit. It only works on your Experian credit report. So it's not going to report to TransUnion or Equifax. It provides a positive line of credit and a small increase to FICO 8, and it helps when you're trying to build credit. Another way to add utilities to your credit report is the self liftoff account. It's very similar to Experian Boost. One thing that I did want to include, they boast of increasing your credit score 49 points. Now, the fine print down here, if you want to take a look at that or go to their website, the fine print really says that that's a Vantage score 3.0. We've already talked about that in lesson 3. It's usually 30 points higher than your actual FICO. That is with people, that is a small segment of the population, people starting at 600, and they're using other factors, other ways of building credit. So in other words, what they're sampling out of is, hey, if you get your utilities reported to your credit report, as well as doing other things that'll help your credit report, then your credit score can go up by 49 points. So I just want to tell my students that 49-point increase sounds wonderful, but that is based on a segment of people who are trying to do everything. So this is definitely something that you can do, but doing this alone probably won't increase your credit score by 49 points. So with self liftoff, it won't help your mortgage FICO scores, but it can improve your FICO 8 and improve your chances of being approved for other credit. There are a lot of different factors that go into credit scoring, and specifically having a short credit history. Basically, what is your length of credit? Well, it's determined by the average age of your open accounts. It's also determined by your oldest account. In other words, how old is your oldest account and how old is your newest account. Those are the 3 main factors that go into what is your length of credit history. Similar to that is thin credit history. So this is where you have 1 to 4 credit accounts. It basically shows inexperience with credit. Experian over here goes through and talks about different scenarios, but basically young people just starting out, immigrant, someone who hasn't used credit in a long time, or someone who just has very few credit accounts will have a thin credit history. So those 1 to 4 accounts, that's what we're going to attempt to solve in this particular lesson. So it shows inexperience with credit, and one of the consequences is that you're going to have a lower score. And something that I want you guys to know is that FICO scores need at least 1 open line of credit for 6 months to calculate your credit score. In other words, to get a FICO score, it takes 6 months. To get a Vantage score, that's actually pretty much immediate. As soon as any account opens up and reports, it will calculate a score for you. In my experience, your Vantage score starts out, as long as it's a good account, it'll start out about 600, and you'll wind up building, the score will increase fairly quickly from there. That's what it takes to at least get started building credit. In this class, we go over a lot of principles, and one of the things that I want to talk about, and I'm going to illustrate it over here in a second, but one of the things that we use is the FICO score model to help us determine exactly what we should be doing to improve our credit scoring. Well, one of the things that we discuss is credit mix, and having 2 to 5 term loans and 3 to 6 revolving accounts open and active is going to give you what we call over here the credit mix. And next, we're going to have payment history. Now, one principle that I talk about, don't spend money just to have credit. Okay, use credit cards to pay necessary expenses. For most of us, our cell phones are a necessary expense. In fact, you might be watching this video on a cell phone right now. If you want to, you can have your cell phone bill put on your credit card and then pay your credit card every month, just like you're paying your cell phone bill. So that's one way to build credit without spending more than what you actually would normally spend. Just a principle: don't go on a shopping spree saying that you need to build good credit. That's really not what this class is about. Also, amounts owed. Don't charge up your credit card in order to try to build good credit. Only use those. Only use credit cards for necessary expenses, and try to keep the balance as low as possible. We've talked about this in lesson 3, but for all practical purposes, what I'm hoping that you do is go ahead and spend money on that account to show that it's active, but pay the balance down or off before the statement date. What that'll wind up doing for you is keeping the card from reporting that you've used however much. Here in a few minutes, we're going to talk about starting out with a $200 credit limit. Well, one of my friends started out, I think, with a $300 credit limit, and one day we were talking, and he said, "Man, they report every week." And what winds up happening is my credit score goes down during the month, even though I always pay the balance in full. It goes up, then during the month it goes back down, and then it comes back up once I pay it off. Well, what winds up happening there is the credit card company is reporting your balance weekly. If you just spend money on that credit card one time and let that account stay still at a low balance, in other words, a small balance relative to your limit, we're shooting for 5% or so, somewhere in there. On a $200 limit, you're winding up just spending $10. So I don't know what that gets you. Maybe a coffee at Starbucks or something. Don't spend money you weren't going to spend anyway. So maybe Starbucks is a bad example, but you get my point. Spend $10 on it and leave it the entire month. Don't just spend money on it to have an outstanding balance. New credit. 10% of your credit score is made of new accounts. Be careful when you apply for new credit. Try to pre-qualify before you apply. In other words, most companies now will give you a soft credit pool, not a hard inquiry, which will count against your credit score, but a soft inquiry, which will tell you whether or not they're willing to approve you if you go ahead and apply for them. And they'll also tell you what they're willing to approve you for if you accept their offer. So make sure and pre-qualify before you apply. Also, make sure the account reports to all 3 bureaus. You can always Google that. I use Google as an incredible tool. Just ask Google. Credit card companies use existing limits to compete with one another. In other words, if you only have a $200 account limit, another credit card company is likely not going to offer you a very high limit. On the other hand, if you have a $10,000 limit, then another company is likely are more likely to come along and offer you something that competes with that limit in order to get you to spend money on their card. Scores don't care about amounts, only the utilization rate. So that's something that I really want to emphasize. We talk about starting small. If you have a $200 limit and you spend $10, that's a 5% utilization ratio. If you have a $1,000 limit and you spend $50, that's still a 5% utilization ratio. It affects your credit score the same. So credit scores go off of utilization ratios. In other words, the percent. The monetary amount doesn't matter. What matters is the percent. First, we're going to talk about establishing 5 to 11 lines of credit. And in the next class, we're going to talk about why 11 lines of credit is used. But for right now, we're just going to focus on establishing those 5 lines of credit for you. You need to have several different types of credit. Like we discussed, 3 credit cards and 2 term loans is a great place to start. Use small amounts on revolving accounts, just like I talked about. Make sure and only spend what's necessary and only spend a small amount in proportion to what your credit limit is. Pay it off every month. Don't let interest accrue. Make sure and pay down your account if you can before the statement date. That way it doesn't report the whole amount that you've spent that month, doesn't report to your credit bureaus. And one thing that I did want to point out to everyone, if we add this 35% payment history to this 15%, the length of credit history, basically half of the points available on your credit score for your credit score is dependent on time. It takes time to build good credit. And I just wanted to point out that if you add those two together that are dependent on how many payments you've made, that's dependent on the amount of time that you've had your accounts open. And obviously, length of credit history, like we just discussed, is time. If you add those two elements together, half of your credit score is dependent on how much time you've put into building your credit score and how long you've had your accounts open. So let's start off talking about how to establish term loans. So we've got Credit Strong here. That's Austin Capital Bank. They don't do a hard credit inquiry. They build credit while you save money. In other words, what you're doing is you're paying money into what would be called a forced savings account, or it's a term loan, but it's secured by money that they put into a CD for you. So you can go to their website and see exactly how they explain it, but basically if you start out with a term loan with them, you're looking at probably, now sometimes they run specials where they don't ask a fee at all, but sometimes usually they're going to ask you for a $15 opening fee, which, by the way, as we'll discuss later, they actually turn around and give out as a referral fee to someone else who referred you to them. Their terms could be as long as 120 months. That's going to come in useful, especially if you've got bad credit, and it takes $15 per month, so it's a very low amount of commitment. The total payments wind up being $1,800, but you only wind up saving $1,000. So over a 10-year period, 120 months, you wind up spending $800 or $815 or $6.80 per month to help you build credit. It's not a bad deal when you're first starting out. So they've got different options, $15 to $110, and these options might change depending on when you view this video. But there are options available as I do this, between $15 and $110 a month, or 2-year options for $50 to $96. So you can pick whatever works best for you. $15 for 10 years sounds like it works, and it does give you your TransUnion FICO 8 score every month. So if you're monitoring your FICO 8 score for TransUnion, this gives it to you for free. And you can have multiple accounts open at the same time. So if you wanted to do 2 Credit Strong term loans at once, you could. And usually it reports in 30 to 60 days. So if you're looking to build credit as quickly as possible, get a term loan on your account as quickly as possible, 30 to 60 days out. Self-lender, Self-Inc., however they choose to be referred to as, go to self.inc. They offer something very similar, a $9 opening fee, and sometimes that's waived, a 2-year term for $25 a month. Your total payment $609, but it helps you save $520 over those 2 years. So you wind up getting that money back. So you put in $609, you get out $520 at the end of the loan. So it's $4.09 per month for this particular term loan, which helps you build good credit over these 2 years. It's a pretty good deal. Also, it has something else for you. One of the things that you can do is get a secured credit card with them. Now, secured credit card, they will only offer it to you after 3 months of payments, and if you have $100 already deposited with them in savings. So it might take longer than 3 months to get your secured card, but the deal that they offer is to give you a term loan. You can only open one account with them at a time. So you've got a term loan and you're going to have a secured credit card with them. So it's kind of like getting 2 in 1. Now the secured credit card does come with one pretty big drawback, a $25 annual fee. So you can add that on to the amount that you will be paying in to keep your secured loan going. But all in all, it's a very good deal to help you begin building credit, even if you have bad credit. Capital One. This really is great for people who are beginning their credit journey. They have a reputation for giving out $200 credit lines to people who don't have good credit starting out. They have a pre-approval process that doesn't result in a hard inquiry. In other words, they'll take a look at your credit with a soft pull and let you know what options are available to you. They also offer secure cards with a very small deposit that graduates. In other words, you get your security deposit back after a certain length of time. And they have student cards that are great for building credit while you're in college. And usually their accounts don't come with annual fees. If we look over here on their website, they have refundable security deposits of between $50 and $200 for an initial credit line of $200 that the security deposit you'll wind up getting back when it graduates. So all in all, this is a pretty good card to start out with. Discover offers pretty much the same exact thing. It's a good card to start out with to start building credit. They offer a student card. They offer the Discover It card. As you can see down at the bottom, they give you, at least the current offer is 2% back, and the pre-approval process doesn't result in a hard inquiry. Usually they don't charge annual fees. So the Discover card is another good option when you're starting out. So what we've discussed so far, remember, is 2 different companies that you can go to for term loans, including Self, which also will give you a secured credit card after 3 monthly payments on time. Then we talked about Capital One and Discover. So there's 5 accounts right there that you can open very quickly. Well, what about Credit One? Not to be confused with Capital One, but Credit One is great for rebuilding if you have bad credit. It offers unsecured credit whether or not you've got open collections. They usually offer you a $300 credit limit, and they charge a $75 annual fee for your first year, and then I think it's $825 a month, so it's pushing $100 per year for that $300 credit limit. But if you have bad credit and you're trying to reestablish yourself, they do offer an unsecured account to help you take that next step away from secured cards into an unsecured card, even though it's very expensive. So Credit One, like I said, they offer unsecured lines to improve your chance for better cards in the future. So they give you an unsecured card, which helps the chances that someone else will approve you for an unsecured card. Once your credit is reestablished, you should really consider going ahead and closing out an account that charges you $75 or $100 a year as it's $825 a month for just for having the account open. You should really consider closing it once you get your credit reestablished. And one thing I wanted to remind everyone, when you close this account, you wind up losing the good credit that you've established with them, and it almost certainly will drop your credit score a little bit. How much depends on your file, but I want to make sure everyone knows that once you reestablish your credit, you should really consider shutting it down, except right before you apply for something new. You don't want to shut it down because it will drop your credit score a little bit. Retail revolving account. Kohl's is a pretty good place to go to. They will approve credit cards for people who are reestablishing their credit, and they do approve cards for people even if they have outstanding collections. I'm not going to say that they will approve everyone. As you can see, we Googled what credit score for Kohl's card. 570 seems like the lowest that they'll go, but if you're reestablishing your credit and you want a retail card on your credit report, Kohl's is a good place to go. Also, Firestone. They have very similar, except they want you to have at least a 630 credit score, and they'll approve even with open collections. So if you're reestablishing your credit after a rough patch, this is a company that you can go to for a retail account. And one thing that I wanted to mention specifically, in fact, we're dedicating a whole slide to it. Guys, please put your accounts on auto pay. Please activate that option where your account will make the minimum monthly payment automatically in case you forget. Now, hopefully you're on top of your credit and everything's wonderful for you. But here at the top, the very first bullet, we all get busy, we all make mistakes. Setting up auto pay on your accounts will keep you from having late payments. And one thing that I want to emphasize to you guys, 30-day late on accident is still a 30-day late. It can stay on your credit score for up to 7 years. As we remember from lesson 3, one late payment can drop your score 65 points. So please enact your auto pay. Please make sure that you've got auto pay turned on your accounts. Experian Boost, like we talked about, it's free. It only works for Experian, reports the bills that you set it up with, and it helps your FICO 8 but not your FICO mortgage scores. Self Inc. offers a service that reports your bills. It's $7 a month. It reports to all 3 bureaus. So it can report your rent payments, your cell phone bills, your utilities. Those will help your FICO 8, but it does not affect your FICO 2, 4, and 5. So that is a way to build credit, to get more than 5 open accounts listed on your credit report, even though it really doesn't affect your mortgage scores. It can help you get more unsecured credit in the future. eRent Payment is a company that can also report your rental history. Actually, your landlord is reporting your rental history. They charge $3 a month, and currently they report to Experian and Equifax. They used to report to TransUnion, which is how they got here. They were the only company that reported to TransUnion or to all 3 credit bureaus, but they dropped that since and now only report to 2. Also, it doesn't affect your FICO mortgage scores, and in fact, it can't if it only reports to 2 of those. It can't affect all 3, but it doesn't anyway, so it's not something you have to worry about. Now, rental history can be on your credit. Like I keep saying, it doesn't affect your mortgage FICO scores. Now, I see the dilemma in that. I see almost, I don't want to call it straight hypocrisy, but if you are making your rent payment on time, in my opinion, if I were sitting down designing a system, I would include rent payment history as one of the main factors that contributes toward whether or not I believe that you're going to make your mortgage payment on time. But in our system, we have a different way of handling that. We use what's called a verification of rent, which is done through the landlord, or you can show 12 months of canceled rental checks, or if you have an automated payment system set up that reports to your credit report, it's right there in front. So there are options for you, even though it doesn't affect your mortgage scores. And like I talked about before, be strategic when you're applying for new credit. Inquiries hurt your credit score and can be a reason for denial. In other words, if you've applied with too many different places, that can be a reason that can be the only reason that the next credit card declines you. You've had too many recent inquiries. So be strategic, limit the number of applications that you put in while you're building your credit, and make sure that you're pre-qualified before you go ahead and apply. And Zechariah, this is one of my favorite verses when I talk to somebody who is trying to build credit. We started this with what Jesus said about being trusted with small things in order to be trusted with bigger things. Zechariah tells us, do not despise the small beginnings, for the Lord rejoices to see the work begin. I think that that's an excellent way to lead into our next segment where we talk to our cliche Rebecca. Remember that I use stock photos. Rebecca obviously isn't a real it's an actress, I guess, posing for a picture, but really it's a cliche of a young person who doesn't know a whole lot about credit, who's just getting started, who wants to establish credit so that he or she can get an apartment and a reliable job. We've got her as a college student with a job, so she's going to be able to apply for credit cards and establish her credit so that when she graduates, she'll be be able to go ahead and get a good apartment, get a good car, a reliable car for transportation to and from work and to and from church so that she can get a good start to her career. She also has one bad account on her credit report. Now we're going to discuss disputing in lesson 7. I'm going to go ahead and give you guys a little tidbit here. This is a piece of information that you're maybe not going to see anywhere else unless you follow a lot of credit boards without a lot of research. One trick that you can do to hide that one bad account while you're disputing it is to lock whatever bureau is reporting one bad account. In other words, if one of the bureaus is reporting one bad account, you can lock that bureau and then go apply for credit cards. When the credit card company goes to check your credit report and it has the opportunity to look at 2 of the 3 credit bureaus, what are the chances it chooses that one bureau to run? Well, obviously 1 in 3. If they choose to run that one credit bureau and yet that file is locked, they might just go on to their second option and see whether or not that one is unlocked and give you credit based on whatever their second option for running a credit check is. So that's a long way around to describing a technique that Rebecca can use to go ahead and apply for unsecured credit even though she has one account. She's in a hurry and can't wait to dispute that bad account and get it off of her credit before she applies for unsecured credit. Or if there's a legitimate problem on one of her credit reports, she can lock that one credit report. We'll discuss that in lesson 9. She can dispute that and have it while it's in dispute. We'll discuss that in lesson 7. She can go ahead and apply for credit cards and either hope that that company doesn't want to look at that credit report, or if it does, then hopefully it'll move on to one of the other 2 credit bureaus. So that's one way. That's I hesitate to call it a loophole, trick, or what is commonly referred to as a credit hack to get approved even though there's something bad on your credit report. That's something that I wanted to mention to you guys. It's possible to do it without having to worry about that one bad account on one credit bureau. Next, remember that your average credit score increases with age. Basically, from 18 to your 20s, you're starting out and you're just now building credit. And according to the Credit CARD Act of 2009, it requires either cosigner or proof of independent income for consumers under 21 years old. So we gave Rebecca a job. She's doing something while she's in college. So she's got proof of income. Those of you who've been following along can kind of see where I'm going with this. If she's going to build her credit, this is where she can start. Does she have $15 a month? Well, she can go to Credit Strong. Their least expensive product is a $15 a month term loan. If she's got $25 a month, their least expensive product and starting at $25 a month. So, and remember, like we'd said, after 3 months, she can open a secured credit card with Self. That way she's got 3 accounts after about 3 months. And does she have up to $200? Remember, I said up to because some of the secured accounts only require $49.99 or up to $200. So she can go to Capital One and be prepared if she needs to put down $200. But in Rebecca's circumstance, especially if she does the trick that I just talked about, she probably won't have to put down any type of security deposit. But one thing that I would tell you, Capital One usually does pull all 3 bureaus. Now, if they pull 2 of the 3 and one of them is locked, they might still approve her. So it might be worth trying, or she might want to just wait until the dispute process after 30 or 45 days. That account should be gone. It's up to her and it's up to you and your circumstance. But if you want to go ahead and put down a secured deposit, you can, of up to $200. And do you have another $200? You can put that down. That's the worst case scenario, but you can put that down on a Discover Card secured account. In Rebecca's circumstance, her first month, we've started her off with paying $40 a month to accounts that she's going to wind up getting the money back anyway, probably right around the time that she's getting ready to graduate. And if she puts down $200 deposits, a total of $400, she'll wind up with 2 term loans with Credit Strong and Self, and 2 credit cards, Capital One and Discover. After 6 months, she'll have the self-secured credit card. So she'll have 2 term loans and 3 credit cards, which gives her a FICO credit score of about 650. So that's a pretty good start for somebody for the first 6 months. After about a year, and like I keep saying, I'm putting my experience and my opinion out here, but I'm not basing this on anything in particular. Most banks, I know most bank cards want to see about a year of credit history before they're going to start approving you for their credit cards. And she should get her deposit from Discover back in about 8 months. That's what I've seen as common. So after 1 year, she should have 2 term loans, 3 credit cards, and about a 700 credit score. So that's a pretty good start for a college student who doesn't, as of right now, doesn't know anything about credit. In a year, she can have a 700 credit score, which is average for the entire population of the US. If she does that, she's doing well. Now, let's talk about one more thing. I try to make sure everyone knows my program is about helping you. And with this particular course of events with Rebecca's plan, she would have the opportunity to earn $1,000. So she could, in fact, more than that. But if she tells her friends about this particular program, or if she on her own goes and sits down with people and explains to them what she knows about credit now and gives them her referral. In fact, I'm thinking about changing this to referral income instead of affiliate income, but I think legally I have to call it affiliate, so I'm gonna leave that there. But if you share your referral links, you can wind up pretty easily and pretty quickly adding up to $1,000 or more in income or credits, so to speak, toward your credit cards. So you can have your cell phone bill paid for a year by sharing referral links. So I want everyone to understand where I'm coming from with that. So building credit, myths versus facts. Everybody knows that I like busting myths. Well, what happens if you've always heard something or someone always says, well, over time, myths become accepted as facts, even though they're just myths. Well, the psalmist says, keep your tongue from evil and your lips from speaking deceit. You're about to learn some facts. You have to spend money on credit to build credit. Is that a myth or a fact? Well, actually, you do not have to spend money on credit to build good credit. Okay? In fact, I wanted to emphasize that so much that I said it twice in the same slide. I know everybody thinks that my slides are boring. Well, I'm actually emphasizing this fact. If Rebecca comes along and she doesn't want to do the self-lender loan or the Credit Strong loan, she just applies for Capital One and Discover. She can leave those accounts alone for a year. Hopefully, she won't have to put a security deposit down. It didn't cost her anything, and she can be building credit just by having the credit card open, even without activity. Now, the risk that you run without activity is that they could turn around and close the account. What I recommend to people is to use your account at least every 6 months just to keep it active. And one thing that I would emphasize, if you want to build higher credit lines over time, it helps to spend money up to close to that credit limit. Now, I would suggest that you pay it down before the statement date comes out, but it does help if you're trying to build higher credit lines, get approved for higher credit lines with that company, what we call a credit line increase. It helps if you spend money on that card to build good credit with that company, but it is not necessary. To go with that, he who sows generously will also reap generously. Basically, what I'm coming across here or what I'm trying to get across to you is that if you put in the work, if you sow the seeds of success, you will eventually reap the rewards of your work. So make sure and put in the work. Rebecca's friend speaks. So I wanted to use this to articulate one of my points that everyone is welcome in this class, even visitors who don't want to say anything, don't want to speak up. Remember, if someone's going through a hard time, they may not want to talk about it, but they may want to be around people who are trying to fix the problem. So if this gentleman just comes and sits in on classes, never says a word, but you can see that he's coming in with Rebecca, leaving with Rebecca, he's with Rebecca, he's her friend. So he asks, does that work for you if you have bad credit? I've kind of been mentioning that the whole time, but it's okay to have that question specifically. Like I said, yes, despite collections and after bankruptcy, this is one of the ways that you can use to help you rebuild your credit even after bankruptcy. Well, what's Robert's story? Let's just say that right now he's in his mid 20s, and at 18 or so, he went out, he got himself a good job, he bought a sports car, as you can see over there, a salesman with a smile on his face, got himself some credit cards. Well, you can kind of see where this is going. About 20 years old, maybe he expected, or he got some unexpected maintenance, alternate transportation. He had to get something else because his car broke down. Maybe he messed his car up. It happens when you're 18, 20 years old. Now he's living on credit cards. He's got those maxed out. Now he's got a repossession on his credit report and some credit card collections. So he wants to know whether or not he can rebuild his credit even if he's got bad credit. Now I want to take just a minute and remind everyone, and we've got my guy here, Charlie, who's really going through great difficulty. We're not going to discuss that too much right now, but Charlie's really going through a lot worse of a time, medical problems, all of that. And we've got Robert over here who's obviously frustrated, disappointment, confused. Guys, we're going to talk in lesson 7 about how to handle bad credit, but I want you to know what you're doing before you dive in trying to fix your credit or recover from bad credit. One of the biggest things that I want people to know, especially people who are suffering quietly, is that bad credit is not terminal. And in lesson 7, I try to articulate that point very clearly with a real person's story that she put out on the news. It's on a website, you can go look at it. But she had a very difficult story about a medical problem. I'll go ahead and share this with you. She actually said, I wish you had let me die rather than having to cost my family so much money in medical expenses. I kind of wanted to reach out to her and say, hey, we've got bankruptcy courts for a reason. So don't let bad credit ruin your life. It's not terminal. And one of the final points that I want to make here is that authorized user accounts help whether or not you've got open collections. That's one place that you can start rebuilding credit. But if you're Charlie, don't worry about that too much right now. I want you guys to be able to prioritize avoiding judgments. Again, lesson 7 is very important. Know your state's statute of limitations. We'll introduce that now. Go to lesson 7 and find out what I'm talking about. And trying to rebuild your credit could make it difficult to settle any bad debt. In other words, if a credit collector looks at your credit report and says, well, you're obviously starting these new self-lender loans, you're trying to rebuild your credit's important to you, I'm going to charge you more money to settle this account. That could happen. So review lesson 7 before you start making any decisions about rebuilding your credit, okay? And one more myth versus fact segment here. It takes 7 years to recover from bad credit. A lot of times people can say that, and I'm going to go ahead and say that this is half true and half false. Okay? Now here's the reason. Like we talked about in lesson 3, your payment history is incredibly important. One late payment can drop your credit score by 65 points. Imagine what having several collections and a car repossession, medical collection debts, all of that. Imagine what that does to you or to your credit score. Not to you, your credit score. But here's something that I wanted to emphasize to everyone. That impact reduces over time with no additional delinquencies. So yes, it will affect you for conceivably 7 years. On the other hand, if you get sued, it will, if you get a judgment against you, it will affect you for at least, depending on your state's laws, for at least 10 years. And that court judgment could be renewable in perpetuity. So it actually could be a judgment against you for life. So I want to make sure everyone knows their options for settling bad debt. That's in lesson 7. Please review that before you start making any decisions about rebuilding credit while you have bad credit. But if you're beyond the statute of limitations, one thing you can do is open a term loan that lasts longer than the bad credit will stay on your account. So if you're not worried about getting sued for the bad debt, if you're beyond the statute of limitations, and you think that it's going to take longer than a couple of years, you can get a Credit Strong account. Their term is for 120 months. You can also get secured credit cards, which will stay on your account long after your bad credit drops off. So when the bad credit comes off, you'll wind up having good credit, and you can use authorized user accounts. You can also go to, as we talked about before, Credit One, and you can go to a company called Open Sky, and I circled their Credit Karma's website. They're listed as a good second chance by a reviewer. So myths versus facts, you can use secured accounts and authorized user accounts to rebuild your credit while you still have bad credit. So does it affect you for 7 years? It can. So the myth is half true, but you can also rebuild your credit to the point that if you follow my 2 and 3, the 2 term loans, 3 secured credit cards, you should be able to rebuild with no additional delinquencies. You should be able to rebuild your credit to at least 600, where someone would rent you an apartment or a house while you're waiting for those bad accounts to fall off your credit after 7 years. We'll discuss that in lesson 7. And at that point, you will have all the good credit that you've built and none of the bad credit from your past. And Proverbs 3:5 is a good lean into talking about the professional members. Lean not on your own understanding. And you know I really take this verse to heart. Sometimes God provides people to help you when you really need it. Our professional members participate in wise credit management to serve you by doing what they do best. And remember, you can watch these videos online, but you should also find a local meeting to come and share your difficulties and also your successes. Remember, we celebrate success. I tried to make it easy to find local groups and local professionals on wisecreditmanagement.com. You know, back when I was younger and just starting out, in fact, it was before I became a real estate professional, I found a house that was a really good deal, so I put it under contract. It was being sold by a couple that was getting a divorce, and it needed a lot of rehab work. It was a really great deal, and I had a pretty big down payment. So I went down to my bank, and they actually said no, and the guy who turned me down was actually kind of rude about it. Luckily, I didn't give up, and I found a different bank who would do the loan for me. But while I was building this class, I decided I wanted to make it a lot easier for you to find somebody who can help you. All you need to do is type in some details about your situation, and you can have up to 3 professionals contact you about how they can help you. So whatever your situation is, maybe you've got a rehab that you want to do, maybe you want to get an FHA loan, but you've got bad credit. Whatever it is, you can enter some details about your situation, and we'll help you find a wise credit professional to help get you approved. Well, what if you want to find a great deal like I found, but you're not sure how to go about doing that? Well, what you need is a buyer's agent. What you should do is enter in what you're looking for, and we'll help you find a local real estate agent that can help you find the deal that you need. Just type it in, and we'll help you find a professional that'll work for you. And of course, you need insurance, but really what you want is the best coverage on your home for yourself and your family. And guys, don't be like our friend Charlie and have a major health problem without life and health insurance. Especially if you're buying a home and you have a family, please contact an agent to get yourself proper coverage. And guys, if you have to make major decisions about your retirement account, especially if you're going to withdraw money for the down payment, please talk to a certified financial planner. Also, if you're a freelancer or some type of gig worker, please contact someone about getting a Roth or a self-employed retirement program started. And guys, if you're behind on any of your bills, maybe late fees are being added onto your account, maybe you're considering bankruptcy, please contact a certified credit counselor about a debt management plan to see if you qualify for Chapter 7 or if you need to prevent foreclosure or automobile repossession. It's time to talk to a bankruptcy attorney. On the other hand, consumer protection attorneys specialize in the Fair Credit Reporting Act and suing for violations, so they can actually wind up getting you money out of these companies that are harassing you. And credit repair organizations can help you by professionally disputing bad debt. Many of them are former or even current mortgage professionals who know the laws on disputing and how to get things removed from your credit report. And finally, if you need a reliable and inexpensive car like our class mascot, the Golden Nugget, then you should contact one of our dealers who can help you find what you need. And Zechariah, do not despise the small beginnings, for the Lord rejoices to see the work begin. I kind of want to emphasize that. Guys, get started. Your homework: would your credit score benefit from new credit? Or conversely, do you know anyone who would benefit from new credit? What do you think would happen to your scores in the first month? I'm going to give you a little hint. Usually they go down the first month. In fact, it takes 3 to 6 months to recover, for your credit scores to recover. So always remember that when you're starting with new credit. But would new credit benefit your account and benefit your credit scores? Document your journey. If you go and apply for new credit, what was your credit score before you applied? And then what was it after you applied? How many points did it drop? About 5 to 10? Okay. And did it recover 3 months afterward? I want you guys to see how each action you take affects your progress. If you're like me, you can use a spreadsheet for tracking these small changes. I also want you guys to create a file for any correspondence, especially if you've got collections outstanding. But what I want is for you to create your own success story. Always join our community. Remember to, and especially if you're on YouTube, like and subscribe. Cheesy smile. Guys, seriously, we celebrate success. Please share whatever success you have or whatever you're facing. And do you know anyone who needs this class? We all know how to forward and share links on our phones or through email, however you do it. And as we talked about in the sow, in other words, sow and reap, if you have affiliate links or referral links, feel free to use those. Overcoming. Guys, focus on the goals and not the obstacles. It can be a long and hard journey, but it's worth it. We're going to take a minute and review or preview Lesson 5, how to maximize your credit score. One of the things that I do is I focus on people who have 850 credit scores. What do they have on average? 5 term loans, 11 revolving accounts. They mix their types of accounts. They have about a 1% utilization ratio. Remember, that's on each account. So each account matters, not just one. And they all have accounts over 4 years old. And 850 credit score, people with 850 credit scores have no derogatory marks on their credit. So in this class, we're focused on FICO mortgage scores. We're focused on giving you the tools that you need to build your credit. But remember that revolving accounts include bank cards and store accounts, and your utilization ratio counts for each account, including term loans. And we discussed that in lesson 3. One of my favorite slides, my artwork. It's wonderful. But look at how simple it is. Credit scores go up as your utilization rate goes down. I try to make it that simple, and it's almost obnoxiously terrible art. But as your utilization rate goes down, your credit scores go up. Pretty simple. And in lesson 5 at the end, we're going to talk about how you don't need an 850 credit score to own a home. In fact, we cover what I believe is a gentleman who calls himself Debt Stinks from my FICO forum, how he recovered from Chapter 7 bankruptcy in 2 years, and I'll say within 3 years, he was able to close on an FHA mortgage on a new construction home loan. Kind of my point is that even though in lesson 5 we talk about maximizing credit scores and we discuss how to get an 850 credit score, you don't need an 850 in order to qualify for a home loan. I hope all of you understand that very clearly, that even this gentleman who's 2 years out of bankruptcy was able to qualify for a FHA loan to buy a new house. So guys, remember, bankruptcy is not the end of the world. With that having been said, I look forward to seeing you in lesson 5, and may God bless you on your journey.